Hey folks, ET here, and today I'm going to talk to you a little bit about MNF and ODTE GEX and kind of just give you some pro tips now that we've had it out for quite a while. We made a video early on and just now things have kind of settled a little bit and we have a little bit better view of how things work. So we're going to talk through a couple of things. First thing I want to talk about though is actually the difference between our aggregated data, our aggregated gamma that is, on our expiry filter, right? This is going to be different. This is an aggregate. This is an overall for 818. Okay, so you can see we still had that nice big pull to 435. I see some people on Twitter sometimes confuse the difference between this aggregate of existing gamma pulls and then our 0-day gamma pulls, which is just measuring that specific day. Okay, so really what you want to do here, and it can get a little confusing, but Convergence and MNF are really going to be your help, your key to kind of viewing this and seeing. One thing I really want to talk about is I very much like by time over by strike, and that just kind of works out that way. As you can see, when we get to these by strikes, they can be misleading. If you watch them grow, it's not as easy to see them grow as they go or shrink as they go. Okay, and let's just start with positive levels are repels. That doesn't mean necessarily a rejection or a bounce. It just means that one of those is possible. Okay, so if we get up to a specific level, we get up to 438, it's a pretty sizable bar, right? It could repel away. If it gets above, it could repel in an upwards directions towards a pull. But there's a reason why a lot of us are using buy time, because it shows us kind of a live snapshot of what is growing and what is not growing. So you see the end of the day here, this is the close, right? We saw 435 get a big run down, and we didn't quite close there, obviously. We closed a little bit above, but we also see 436 getting a little bit of a pull down. If you see, sometimes we actually like to take screenshots and draw an arrow of something moving. Something to be leery of. Right now, OPEX was a little bit different. There were a lot of pulls, there were a lot of rebalancing, and usually this is going to look a little bit cleaner. But something that I want to talk about that gets people confused and maybe not thinking about it in the beginning are these early pins. Okay, so let's just look at 439 here. It did pin early, and I saw this move down, and I thought, ooh, maybe we're going to see a little bit of a pull, but then it flatlined and never moved. Okay, so when you see a line that is not moving, kind of just put an X on that. Scratch that out and say that's potential, but I don't see a whole lot of extra movement on it right now. Okay, and these early pins will happen. As you can see, 439 started pulling down real early, and then we just never moved from point to point. But we saw other ones pull down and move from point to point. 434 had a little bit of action. Okay, and when you're viewing this, think of it in these terms. Okay, so when they're above the zero line, the further above, they become very positive. Okay, so above is a positive line. So we see these positive lines here and we think, okay, that is our repel, right? So 436, we got a little bit above it. We repelled just slightly above. If you can see, we closed. Let's delete these lines from our tradie chat from yesterday. This is where we were talking in our Discord about the different lines to look at. So we ended up repelling a little bit above to that 436.46, still in this pretty sizable ghost zone as we see there. So these positive levels repel, and these ones that pull down are going to be our negative levels that start to attract price. Now, here's the thing. They don't always have to start to pull down below the zero to start moving price that direction. You will see a lot of times that a level that will be up here positive will start slowly ticking down and slowly ticking down. And as that happens, you'll see a reversal in that direction a lot of times. Now, one of the things that you want to do when you're doing that is you want to keep a very close eye on MNF. Now, let's just say, simply put, the market is trending green on MNF, okay, and you see price going a little bit up to match that, but then you see a tick down and a price below. Okay, so you have a price below where you have a strike below where price currently is, and all of a sudden you lose convergence. Okay, convergence is going to be something that you want to pay a lot of attention to. So when it's green, okay, it matches the flow of MNF. When it's red, okay, it changes, and that's bearish match of MNF. Green again, and gray is contrarian. Gray means price can move contrary to the direction of market net flow as it wants. So one of the things that I do is I use this a lot actually to look at some reversals as I'm going along to see if we've gone gray and see if an opposing level is pulling. So a good example would be if we're sitting up here at 436, we have a green MNF, and all of a sudden Convergence is lost, and I see 435 or 434 starting to gain some downward momentum. Okay, that is where I'm going to think, okay, where's my gamma level on my chart, and maybe I can short here. I know it's contrary to the direction, and you do have to pay attention to it, but it is helpful to know that those can be. And like I said, you're going to see a lot more clean information on a non-OPEX day when rebalancing isn't happening. Yesterday was very, very, very mixed, and it's kind of hard to follow the data at that point. But here's a very great example right here. We had this massive spot, right? The bigger the bars that we see, the better on this, I want to point out. So these tiny bars don't give you nearly as much confluence, and you might want to ignore them a little bit, right? So these tiny bars, when they get big, when they start to grow like this, you see them growing quite large here, and we have this big run up, and then you see some very large bars growing to the downside for that, and that was a good downside play. Then once again, you see them spike up, right around this spot here. You start to see, and you can kind of front run if you want, and then the big bars gave us that nice run there late day. So it's something you really want to pay attention to with the two things, right? You want to look for opposing levels if you're going contrarian, and larger gray bars if you want to go contrarian, okay? So if you see a level that is below or above price, depending on the direction of MNF, if it's red, obviously, if MNF is red, then you'd be looking for a contrarian move to the upside, and if MNF is green, you'd be looking for a contrarian move to the downside, which you see worked really well here. Now these aren't massive moves. They look big on the chart, but you can draw a line there. It's about $1.50 move as you go down there, and that's a pretty good scalp if you are day trading that thing, right? And one thing, excuse me, and it's a little bit subjective. A lot of times when I see lines get too far below the algo line here, I will start to look for my exit and see if anything is shrinking on convergence, whether it be green, gray, or red. See if those little small lines are going. So when we're pairing this up, once again, you really, really, really want to see buy time is my favorite. Others are pretty skilled with the buy strike. They are. It's difficult for me to visually see what is really growing as we go along, and that's why I think a lot of us in the MNF chat in the Discord always use this bar right here, right? And then this is 0 day. So don't try to plan ahead on this. Some folks have gotten somewhat skilled at it. They'll see a little bit of a late day move, and they'll think, oh, maybe that's where we open tomorrow, and they've gotten some overnights that have hit. But that's not something that I do or something that I recommend necessarily. I just think it's really important when we're using our buy time to look for what is moving now. Okay, so a really, really good example again is when 436 started pulling up, right? We started getting that repel right there throughout the day. We did have a couple of rejections off of it, and then we finally got a little bit above it as it started. It's kind of funny to see. We couldn't get over it for a little bit, but then it had this little bit of move down. Just draw an arrow with your eye that helped kind of pull it upwards again, and then it kind of just hung out as a positive level, which kept price above as we went. And you can kind of look at the chart throughout the day as you go, and I'll maybe superimpose a couple of these and do a chart play so you can see one day. But as you see these going along, you know, you can see the difference in the convergence, and you can see the difference in the 0 day. And once again, pay attention to the 0 day for your day trading needs, and pay attention to your aggregates for maybe your swings if you're looking a certain way. Your aggregates for your expiries and your GEX and VEX profile are very good examples as to where price is most supported. So as you can see here, pretty simple to see that our price is supported right around this area quite a bit. We had a pretty big pull to 435 for the 818. Makes pretty good sense. Then if you pair that with this right here, 435 pulled down nice and hard. Now, once again, this will reset every single day. It is 0 day. So this 0 day is what you pay attention to for your day trading, and your other version up here is what you pay attention to for when you're planning out. But they do oftentimes at the end of the day start to match out a little bit, and you'll start to see if we go and just check next week's expiry here, we might see the fact that our biggest pull is still 436. With OPEX, there might be some rebalancing, so change. So make sure to check this after the close on Monday to see if there's any big change. But you can see here there's also a pretty sizable pull to full 440. So you can start to plan your trades when you see the zero-day GEX pulling. You know, if you see a big 440 start to pull down a little bit on our 0-day, there might be some potential for it to run up from that day. And how I plan these and how I play these is so simple. Usually we have some tighter gamma to go off of instead of this big ghost zone that we're trading in. There's just a lot of smaller levels in here that aren't affecting price too much. But usually what I do is I'm just looking for a reversal play. So if we have a green MNF and we have some pull going down, I'm going to be patient and I'm going to wait for a level, and I might just draw a line just so I know where it's been tapping. This was a pretty good spot yesterday where we saw some rejections if you look left, right, and we saw some bounces if you look right. So this 435 here, which we were pulling pretty hard towards and had a lot of gamma exposure there for the close of the day, right, would be a spot that I would mark in my brain. Okay, set an alert on SPY. We have a green MNF, and I think we're going to run up a little bit, but I want to long the pullback. I do not buy longs in the middle of a range. I do not buy longs on these big candles here, right? I have no interest. If you see, right, if you decide to go long right here, you have one candle before you had to get back out. Okay, so I want to get it here closer to the 435 level where I've drawn a line. This is so simple. You can set an alert with TV to tell yourself, I've seen price action for a little bit. I know how things are going. I can see the 0-day gamma starting to play out a little bit, and now I have a plan to go with. And then you just keep an eye on MNF, but these things are right next to each other, folks. So you can see them sitting right here. You kind of know exactly what you're going to be looking for as that time goes on, and then you can plan your trades, and then you can trade your plan. I do swing an awful lot. It is my bread and butter, but I do scalp 2 or 3 times a day, 1 at minimum, and I do scalp SPY so I can keep kind of that skill sharp. But this is how I plan those out. And I know this can be a lot to think of, kind of going in and doing it, but if you slow everything down a little bit and just check your 0-day, right? You just want to check your 0-day, you want to check your convergence and your direction of your MNF, and you can check flow line if you want a little bit too. You can see if there's any confluence going. So we did finish with TFC, just to point out when the markets close, TFC sometimes doesn't show up because guess what? The markets close. So you don't necessarily have to worry about looking at that because we're not trading SPY at the moment, obviously. But really just take your time to look at these levels, see which one on buy time are starting to see big, not even necessarily big, but you want to start seeing some ones that are moving contrary. If you have a bunch of flat lines going up top, a bunch of positive levels, then you see one just to start tick down and start to get these little tiny tick downs, right? This updates quickly every few minutes, so it's not like you're getting late data, right? And things don't move immediately. A lot of times you will see a level begin to pull down here, you'll see a strike begin to pull down here, and price will go contrary to it for just a little bit, right? Maybe we're in a little bit of an uptrend, excuse me, maybe we're in a little bit of an uptrend and we're approaching a positive level like 436 as an example, right? Price is coming up, candles are coming up, but then all of a sudden you see 435 begin to get that pull. You can plan yourself, okay, 436, let's look at my chart, I'm going to draw it out, I'm going to give myself an alert, and that is where I'm going to think about entering a short as long as the plan makes sense, because we see that level pulling, okay? And we just pair it with MNF and convergence, and we can just kind of get along real nice. Hopefully this is a better example and a good idea to kind of get everybody going, to have some understanding on what exactly we're looking at and what the kind of the simplest way is. And, you know, almost everything you need is right here. It's in these 2 lines. You don't need to go very far. You can draw it out on the SPY chart if you want, you know, on this page. You can do that if you want. You can see what that looks like to kind of get those pulls. But really, you're going to get most of the information you want here, right? And you're going to get it from setting a few alerts, and then it's just a set it and forget it thing. You get the alert, you check, you just do a quick check real quick. Are there anything that is pulling down? And remember, don't pay attention to the early pins as much. Keep an eye on them just in case, but don't pay attention to those. Don't get caught and don't get bagged thinking that is where it initially goes. And that is the main reason why I wait 30 minutes to an hour to trade, because by then you start to get a bigger picture of what all of this looks like together. I know there are some very, very, very talented traders who trade the open and really nail it, and props to them. They are very good at that. It is not necessarily my skill set. I am a patience play person, so if you are one of those as well, this is going to help you drastically. Hope this helps. Everybody have a good weekend, and I will see you for our week ahead tomorrow.